Real Estate Answer Man, Episode 3. Who are mortgage brokers? Hey everybody, I'm Barry Kessler, the Real Estate Answer Man, coming to you from sunny Southern California. This is the podcast where we talk about buying and selling real estate. We discuss investing in real estate, renting, leasing, landlord and tenant rights, as well as California real estate law. We discuss home improvement, going green. Is it a good idea to put solar panels on your roof? If it has anything to do with putting a roof over your head or somebody else's head, we talk about it and much more on this show. I'll even take you to places only a native Southern Californian will know about. There's something for everyone to learn, so let's get started. Thank you for joining me here on the show. Today I have my favorite mortgage broker, Tim Love. And Tim is going to talk to us a little bit about, this is of course part of our tutorial here. We're talking about lenders, and all of you have questions about mortgage brokers. So my question to you, Tim, is why would somebody go to a mortgage broker instead of a big bank?
Good question. There's actually a lot of reasons. Probably one of the biggest reasons is the flexibility that a broker has. And I'm actually a broker and a banker. Really, that just means that we do some things in-house as far as underwriting, docs, and funding, and some things we broker, which means that we just pass the responsibility on directly to a lender. So really we have a lot of flexibility. If a loan doesn't work, if you have a particular circumstance and that loan isn't going to work for you, then if you're a bank and you don't have that loan program or something to help me, the borrower, then I have to go somewhere else. With me, I can take that to a different bank, so I am the same guy. You get to talk to me, and we're approved with 61 different lenders right now. So most of those are niche programs, kind of specialty things, but even just your standard fixed rate loan purchase or refinance, we have probably about 30 of those that we can use that are pretty solid and normal lenders that you would have heard about. Other reasons it allows me, banks are very, very numbers oriented. They're very quota oriented, and not so much in my world. We do a little bit lower volume than most banks, but we have time then to handhold and really answer questions, make sure everybody's informed in the process. Really, really important things, especially for first-time buyers. Other people maybe a little more seasoned don't need quite as much handholding, but that's a big one. Just personal time, follow-up, availability after a loan closes. I'm there. I answer questions for people 6 months, 1 month after, 6 months after, a year after. It's just nice to have a person in the industry sometimes that you can refer to if you have to deal with a tax assessor or something. I provide all of that and help people through those steps. Not just rates. Shopping is a really good thing. Having 61 lenders, we can often find best rates, certainly best service because we have the time. Another big one would be mortgage insurance. A lot of people think mortgage insurance is a policy and you go out and you get mortgage insurance and it's this much. Generally speaking, that's true, but a bank usually has one mortgage insurance company associated with it, and we have 5 that we can use in the broker world, so we can shop mortgage insurance. Most of the time it's the same, sometimes you get a better deal. So kind of nice to see that and sometimes save someone a few bucks like that.
Well, so obviously, so what it seems to me is, what you're saying is you have many more tools than a bank has. Someone will come to you if they don't fit the criteria that the big banks actually have as far as lending is concerned.
That's true. Another big reason is even without those tools, even for your generic, regular old loan, person has good credit, lots of down payment, we actually can close much quicker oftentimes. Oftentimes a bank, again, numbers cruncher, quotas, stuff like that, they may take 45 days, 60 days or more sometimes. You just kind of get lost in the shuffle. Generally speaking, a conventional loan for sure, VA loans we can close in 30 days or less in most cases. FHA often the same is true. Sometimes it takes a little longer for the inspection processes, but not the loan process. The loan process is still quick and smooth.
So it sounds like obviously you give much more personal service than the big bank does.
Yeah, absolutely. I've worked at banks. I know the difference.
All right, excellent, good. So tell me, Tim, what would be the 3 most common questions that like somebody who was going to be approaching you to take a loan, what are the questions they ask you?
Well, gosh, the biggest one I get almost every day is, what is your rate? Of course, that's a good question. You hear rates on the radio, you can find them on the internet. Generally speaking, people don't realize there are a minimum of 15 criteria to quote a rate. People just want to hear what they heard on the radio.
What's the rate? Yeah.
Generally speaking, an advertisement is something that is designed to get the advertiser's phone to ring. And when they do, then they'll tell you what they can really do for you. Oftentimes, if you listen to the fine print or the really quick speaking at the end of a commercial kind of thing, oftentimes those will include things like 10-year fixed. I don't know many people that get a 10-year fixed loan. It more than doubles your payment over a 30-year fixed. Most people can't afford it. But there are times. So that's the number one, I would say, is rates. Again, but the criteria, I mean, you have to know things like, first of all, what is the property type? What is your credit score? That's always a big one, but it can vary dramatically. Do you own other properties? Are you going to have other loans on the property? Or if it's a refinance, do you already have a second? Maybe you forgot you had a second because somebody gave it to you for free when you got your previous loan. A lot of different things go into that process.
It's funny, people forget that, right?
Yeah, there's actually a big difference between a condominium and a single-family home in pricing. If you put less than 25% down on a condominium, the rate's about 1/4 to 3/8 higher than a single-family home.
Oh.
They're identical if you put 25% down, but if you put 20% down on a single family and a condo, the condo is a chunk higher in rate.
Condos, townhouses, are they the same, or is a condo a specific kind of a...
Yeah, well actually a condo is a zoning issue. Most townhomes, most townhome places, people will call them a townhome. It's got maybe a neighbor on each side, and they're not the traditional condo that looks like an apartment. But if it says condominium or condo in the legal description, then it's a condo.
Okay.
The only exception to that is if it's zoned as a condo and it's detached. There are very few, but they are around. And you'll find a detached condo is priced the same as a single family home. If it doesn't say the word, if it's attached and you have a row of houses, it's not necessarily a condo. Check the legal description or call me and I'll give you the legal description. And in that legal description, if it doesn't have the word condominium in it, then it's priced like a single family home. It just happens to have homeowners association dues associated with it.
Okay, so remember that when it comes to rates on condos, come in with 25% or you're going to pay higher rates. So what else do they ask you?
Boy, you know what, I took a couple of notes for you here.
Yeah, well, yeah, take a look.
A couple of big ones, I would say, how much down payment do I need? That's a big one. People think, there are a lot of people actually, probably half of the population still thinks that you have to put 20% down to buy a house. Although there's legislation out there that may be true in the future, at the moment it is not true. You can actually get a loan as little as 0% down if you're a veteran.
Right.
3% down, conventional, regular old conventional financing, 30-year fix, 15-year fix, 5/1 ARM, all that stuff, 3% down. As little as, again, there are guidelines on all of these. You have to have a decent credit score. You can do 5% down, 10% down, 15% down, all those conventional. FHA, you can do as little as 3.5% down.
Wow.
So a $400,000 house, you need $12,000 down plus some closing costs. With less than $20,000, you can usually get into a home similar price as rent.
Okay, that sounds good. So Tim just talked about closing costs, and if you look at one of my one of my shows, you're going to be able to see we talk a little bit about closing costs for buyers and for sellers too, but for buyers especially. So, third, what would be the third most common question you get?
One of the most common phone calls I get is when someone is actually out there looking for a house, how much do I qualify for? That's a definite process. It's we call it loan pre-approval is the best way. We can do loan pre-qualification where I can talk to you over the phone and you tell me I make $60,000 a year, I have $20,000 in the bank, I have a credit score of about 700, and I can give you an idea of what you can qualify for. However, if you're going to make an offer on a house to buy, you need a pre-approval letter. Very different than pre-qualification.
Okay.
The proof is in the pudding. Now, you told me you make $60,000 a year. You have to show me that you make $60,000 a year. I need pay stubs, bank statements, W-2s, tax returns. You may write off some things. That will come straight off your income. We need bank statements to show that you have the $20,000, and we need to run credit to say that you really do have that 700 credit score.
Yeah.
And then it goes through a process. I mean, the pre-approval actually is a pre-approval. It goes through, I run it through a approval engine, they call it, a software program. It's Fannie Mae or Freddie Mac.
Okay.
The differences are similar but broad. There are a lot of things you can do with Fannie Mae that you can't do with Freddie Mac loans. Some things that you can do with Freddie Mac that you can't do with Fannie Mae. So once we get the whole set of paperwork from you and I can pull it apart, diagnose it, and say, the best loan for this situation for this person is this one.
Okay.
And you don't care if it goes to Fannie Mae or Freddie Mac. It makes no difference to you. And it really doesn't matter if you go to Wells Fargo or Flagstar Bank or Chase Manhattan or Bank of America. Really, in general, if you're interested in rate, then you're interested in rate or price. You know, bottom line might be the actual loan payments that you make. You may want to increase and do a shorter term, 15-year instead of 30 if you want to pay it off early. But if you're young guys like Barry and I, then you know you might want a 50-year mortgage because you're going to be around forever.
Oh yeah, a long time. So how long does that take to get from them giving you the info to you saying, okay, you are now approved for X amount of dollars?
Generally speaking, I can do that in 24 hours or less. Again, big difference between a bank and a broker. Banks oftentimes take a week or two or whatever. Sometimes you want to go shopping this weekend and you give me this stuff on a Thursday afternoon. You want to know what you qualify for before you go shopping.
That's right. And, you know, when you're out shopping with your real estate agent is going to make an offer for you. He's going to have that pre-approval letter there. So it's really good to have that in hand.
Yeah, absolutely.
So we talked about, you know, what it is that these borrowers ask you. What would you like them to be asking you? The questions they don't ask.
Some people ask this, but not many. One of them is, why you? Why me? And I would say a lot of it, the company that I work for, CFC Mortgage Bankers, is a tremendous company. We have a really solid team of people. I mentioned earlier we do our own docs, underwriting, funding, so that all the way through the process, we are the bank. Those are the banker relationships I talked about. And then we have agreements with banks that will automatically just sell that off to them after the fact. So your first statement will never come from us. It'll come from the bank that we assign it to. And again, to you, usually doesn't matter which bank. Some people ask, some people don't. Some people say, I definitely don't want a Bank of America, or I definitely don't want a Flagstar Bank or a Wells Fargo or something, but they're all solid banks. You may have had a bad experience, but generally speaking, they're very, very similar in their processes. And the other part of my team, not just CFC Mortgage, which we're a pretty good sized company, largest independent in Ventura County, but my personal team, my wife Lori is my assistant. And this year I made a great move. I hired a processor so that she works for me and me alone. Her name is Angela Ortuno.
Yes.
She is very, very awesome, very thorough, and helps me to spend more time with my clients so that when you guys have questions or whatever, then I certainly have time to deal with them.
Yeah, there's no doubt about it. CFC Mortgage is a top-notch company, and of course, Tim's here because we love Tim and we love CFC. So, what would be another question that you wish these borrowers would be asking you that they don't ask you?
Well, one of them would be, are you full-time? Are you a full-time loan officer? There's a lot of people out there that are part-time. If you ever see your loan officer waiting a table at the restaurant that you go to in the evening, you've got a problem. It's really, really difficult, even being there all the time. I spend a couple hours a day studying just the market to find out market changes, little things that change within the underwriting system so that we don't make mistakes. When we're in a 30-day escrow, you don't have time to make mistakes. You only have time to just keep the ball rolling. Now, I'm not saying I'm mistake-free. All of us make mistakes, but certainly limiting those through education and knowledge helps a whole heck of a lot. So, that's a big one. Are you full-time? I would say probably another one, a big question I wish people would ask me is, what would you do if you were in my shoes?
Yeah.
I'm an analytical freak. I love credit reporting. I love the process. I love teaching people credit. I teach classes on credit. And the difference between a 699 credit score and a 700 score can be 1/8%, sometimes even 1/4%, depending on the loan. That can save someone 40 or 50 bucks. Again, 40 or 50 bucks, that's free Starbucks all month.
Yeah.
Every month. So there's little things that I do, and again, I just analyze everything to death. I'll go through and for each borrower, in most cases, I'll look at 5 or 6 or 7 different loan options, particularly if they have less than 20% down. And so I often have a very strong opinion on what I would do, but I like to present other choices as well and say, you have a choice. You can do a $600,000 purchase with a $500,000 loan, put a smaller down payment and have mortgage insurance, or you can still put the same $100,000 down, but maybe have one-time mortgage insurance. If you have more cash than you have income, you can do a first and a second. So there's a lot of different options, and some of those come with cheaper payments. Some of them come with less out-of-pocket dollars. And I try to match them to the borrower, say which is best for them, but then certainly you, the borrower, that's your choice, what makes most sense for you. So I like to spread them out, put them side by side, and people can look at them and go, this one makes sense, but we don't want to put that much cash and all that. So what would you do if you were in my shoes is a good question, because I will do a lot of the math for you.
Yeah, it sounds like you do a whole lot more than some banker would do. At least be able to show, obviously you can do more because you got more programs and all that. And as we spoke about in our talking about looking for an agent, again, you're talking about the same thing. You're talking about you're looking for somebody who's working full-time, who's knowledgeable about the trends and what's going on. This is all really important stuff. So any other things that you would like your borrowers to be asking you?
I'm all for questions. One of the biggest things I ask people, and I think it's a really, really, probably the number one important question for anybody, is what are your goals? Because if you have, let's go back to that same situation, $600,000 house, $100,000 down, maybe you have a kid going to college in the next 2 years, and you really didn't think about how you're going to get them there. You might want to put 10% down instead, have a $540,000 loan, keep the 40 grand, set it aside in a 403B plan or something, and keep it aside for your kid's college.
Yeah.
Or just keep it in cash. But whatever it is, you may not always be thinking down the road. You may want to buy or refinance in particular because you heard a radio ad or something that drove you to, hey, rates are low and I want to refinance. But a lower payment isn't always the best solution if down the road you're going to be put in a real hardship because of an addition to your house you might want to be making, or again, kids going to college, or maybe you have a new grandchild and you want to throw some money aside for them for college. Believe it or not, people do it all the time. Might be $1,000, might be 20 grand, but 20 now, in 18 years, is going to be enough to put them through college, not just pay for a dorm room for 6 months. So,
Right.
you know, I mean, there's a lot of different things that people want to choose, and you may want to give to a charity, you may want to go on a vacation, and you're not thinking through these things, and you're going to put it on your credit card at 19%, but here you're borrowing nowadays at 4.5%. My goodness, I'd rather pay 4.5 for my vacation than I would pay 19. You can still pay your mortgage down. So that's probably, I would say, one of the biggest things are what are your goals? And you really need to think that through as a buyer or a person doing a refinance is what am I trying to accomplish for myself and my family? And that's a huge consideration that most people don't cross.
Well, that was great. You made it all the way through the 3rd episode in my tutorial series in the home buying process. I want to thank Tim Love very much from CFC Mortgage for talking to us and telling us a little bit about the mortgage business. I want to thank you all for listening all the way through, and stay tuned and download all my other podcasts. You can find me at barrykessler.com, and remember, if you're looking to buy or sell a home in Southern California, well, especially in the San Fernando Valley, Simi Valley, Moore Park, Thousand Oaks, and Agora, the Kessler team is here to serve you with fantastic service and all the finest tools in the industry. And remember to check out our website and blog at barrykessler.com. Thanks for listening. See you in your next home.